Hello everyone, welcome to the Commodities audiocast with me, your host and guide Ravindra Rao from Kotak Securities Commodity Research Desk. Hope you all had a fantastic Diwali, meeting your friends, near and dear ones, and enjoying the festivities. For commodities, also the week was initially good, with almost all commodities gaining for a major part amid softness in US dollar. However, some recovery in dollar on the last day of the week created downward pressure on commodities, especially precious metals that paired most of the gains that were seen in the most part of the week. Dollar index softened on bets of slower rate hikes after November meeting and registered a new October low near the support of 109.50. However, at the end of the week, it recovered some of its losses amid better than expected US GDP data. On a weekly basis, the index fell more than 1%. US 10-year Treasury yields also fell from a high of 4.335% to close the week at 4.016%. US economy rebounded more than expected by 2.6% in the third quarter amid a decline in the trade deficit, returning to growth after a contraction in the prior two quarters. But Fed's aggressive rate hikes slowed consumer spending. Impact of aggressive rate hikes by Federal Reserve prominently reflects in sluggish US housing market activity in the recent months. US new home sales in September were at an annual rate of 603K, 17.6% lower year on year and 10.9% down from August revised 677K. Pending home sales index based on signed contracts in all four regions too dropped 10.2% to 79.5 last month. In the Eurozone, ECB expectedly raised main refinancing rate by 75 basis points to 2%, as Euro area inflation remains far too high and reached 9.9% in September. Also, ECB expects further weakening in the remainder of this year and into the first part of 2023, as high inflation continues to dampen spending and production. The week This week would be full of action with important monthly data from US in the form of ISM manufacturing, ISM services, and all important non-farm payrolls, that is NFP print. Over and above, the FOMC meeting will be watched by traders to get a guidance on their stance in the future meetings. Markets are currently pricing in a 50 basis point hike in their December meeting and another 50 basis point hike in the first two meetings in the next year. Apart from Fed, BOE is set to increase the rate by 75 basis points this week, its eighth consecutive hike. Excuse me. US dollar might trade mixed as the expectation for US data is for a moderation that might keep pressure on the American currency. However, hawkish Fed might provide a floor. If the Fed stance is seen moderating, that would be bearish for dollar and bullish for commodities. On the price front, US dollar index has registered a piercing line bullish candlestick pattern. However, the pattern will confirm only on a close above pattern high of 111.15. In that scenario, 109.50 would be the strong support below which the pattern might negate. So watch out for the break and close above 111.15 to get a direction in the week. On the commodities front, precious metals that traded with a positive bias for most part of the previous week paired its gains on Friday amid US dollars recovery. Metals slid due to global growth concerns, but energy commodities rose with both WTI crude and natural gas gaining by more than 3% each. On the precious metals front, COMEX gold traded in a narrow range between $16.41 an ounce and $16.79 an ounce in the week gone by, and closed with a marginal decline cushioned by softer dollar as most economic data from the US signaled towards a slowing economy, adding to bets that Fed may slow down the pace of monetary policy tightening after the November meeting. Investment demand has seen a continuous downturn as indicated by SPDR Gold Trust Holdings. The trust witnessed third consecutive week of outflows with the 5.51 tons being redeemed. SPDR Gold Holdings currently stand at 922.59 tons, lowest since March 2020. Excuse me. COMEX Silver, on the other hand, managed to close the week with modest 0.4% gains on weaker DXY, that is the dollar index. However, outflow of 58 tons in iShares Silver holdings and mixed trend in industrial metals led to pullback in silver from $19.76 an ounce to close the week near 19.2 an ounce. Focus for the week will be on the US data print along with all important FOMC meeting. Traders are betting on a less hawkish Fed after the November meeting. If that happens, precious metals might recover amid US dollar weakness. On the price front, resistance in case of COMEX gold remains at around $16.80 and support is near the double bottom of 16.22. If it closes below 16.22, 16.20, then there is a chance it might fall towards the 252 week moving average near $1,600, and that would be the next target if it closes below 1622. And on the upside, 1680, as I mentioned, would remain as a stiff resistance, which was the earlier breakdown. And if that is taken out, we might see gold again moving higher towards 1705 initially, and then $1740. So all depends on the datas that are due in the week and also on the FOMC meeting. In case of silver, silver has been holding $18 very strongly, and that remains a strong support. Immediate support would be somewhere around $18.76 an ounce. And on the upside, it is the bulls have failed multiple times to move the prices above 19.80 or $20 to be precise. If that is taken out, then we are headed towards the next target of $21. But till then, it is still range bound, and we expect 18.70 on the lower side, and on the higher side, 19.80 to be the upper cap. In case of MCX, on the lower side, 49,800 would act as a good support, which was the recent low. And on the upside, 50,850 would act as a resistance. So above 50,850, we might see prices going higher till 51,200. In case of silver, 55,200, 55,000 would be the support. And on the higher side, 58,500 would act as a resistance. So we expect silver prices to trade somewhere between 56,500 on the lower side, and on the higher side 58,500. Excuse me. Coming to energies, crude oil started the week on a negative note, hurt by decline in business activity in major global economies, but robust exports and high refinery activity in the US coupled with weaker DXY reversed declines and helped WTI and Brent crude close the week with more than 3% and 2% gains respectively. As per weekly petroleum status report for the week ending October 21st, US crude exports surged to a weekly record of 5.129 millions per barrels per day, while refineries operated at a 4-year high at 88.9% of their operable capacity. On the other hand, WTI natural gas was the biggest. Natural gas was the biggest gainer in the non-agri commodities pack, following a 9-week string of declines and supported by a bullish inventory report. On the price action front, WTI crude oil still remains between $92 per barrel on the higher side and $85 on the lower side. In case of MCX, 6,800 would act as a good support, and on the higher side, 7,400, 450 would act as a good resistance. So we expect this range for the week. So any move above 7,450 would be more bullish for crude, and on the lower side, if it sustains below 6,800, it would be weak for crude oil. In case of natural gas, around 440 would act as a support on the lower side, and on the higher side, the last Friday's high around 486 would act as a resistance. So if it goes above that, we might see it again crossing 500. Otherwise, we expect a range of 440 to 418 for the week. Finally, in case of base metals traded mixed previous week amid global growth concerns. China's third quarter gross domestic product grew by 3.9% year on year, beating expectations. But this economic rebound has not been able to calm investor concerns, as year-to-date growth is still 3%, which is well below the official target of around 5.5%. LME aluminium gained 1.3% as the major EU and US producers are calling for a complete ban on Russian metal imports. Owing to this, LME copper decline was also limited to less than 1%, cushioned further by jump in LME cancel warrants to 66%, that renewed fears of market tightness. On the price action front, almost all the base metals are pretty range bound. In case of zinc, watch out for 258 support, because that is almost a double bottom support, and if that is taken out, we might see further downside in zinc prices. So the ideal range would be 258 on the lower side, and on the higher side 268, 270 would be the resistance. In case of copper and aluminum, also we expect a range bound movement. In copper, immediate support would be 646. Below that, 638 would act as a support. Whereas on the higher side, 664 and then 678 would act as the resistance. In case of aluminum, also 212 would be would be the cap on the higher side, and on the lower side 188 would be the support. To conclude, commodities may continue to waver as markets now cautiously look forward to any hints on the policy outlook in the FOMC two-day meeting this week. US data prints in the form of ISM manufacturing and NFP would set the tone for Fed stance after the November meeting. On the industrial metals front, traders will be cautious as LME decision on Russian metal ban is pending, as exchange is set to receive responses from its users on the same. So overall, an interesting week with a lot of action on data front. Central bank meets, pointing towards a super volatile week. That's all for this edition. Best of luck and trade safe.